Hey everyone, this is Logan Hertz with Hazeltine, and we're continuing our series of interviews with experts in the field who have a lot more experience than me, a lot more knowledge than me to try and educate our audience about a broad array of subjects. And today we're excited to be joined by Ben Feigenbaum. Ben has over 38 years of experience in the industry. He is a second generation specialist in disability income insurance. And like in so many other fields, the more you specialize, the more value you can really add. As they say, do one thing, do it well. Ben and I have partnered on cases before. I certainly am not a disability expert, nor do I pretend to be. So when I identify as part of the planning process a need for some disability coverage, we bring Ben in, and I've certainly benefited from his expertise. So Ben, good to have you with us today. How are you doing?
Doing great. Thank you for having me.
So I want to start with why. Tell me why disability? Why do you do disability?
So I specialize in disability income because it's a very underutilized product in the financial services uh, marketplace, and I'm a specialist. Most persons that are out there have almost no or no disability insurance. If they do, it's being provided for them at work, and those plans are very weak in their payouts and contract definitions. So it's an area where I can impact the customers out there in the marketplace and the financial planners and accountants and other financial advisors that serve them. So I'm here to help people. That's why I specialize in these contracts.
So for our audience, can you just give us the general principles around disability and why someone should consider a disability policy?
Sure, if you're an executive or self-employed and you have you're involved in a car accident and you're unable to work, where does next month's paycheck come from? Almost 50% of the mortgage foreclosures in America are due to an unplanned injury or illness. And so for most people, they're not thinking about how that would impact their lives if they were unable to work and draw a paycheck a month, 2 months, 3 months in the future. Imagine it's 3 months from now, you've received no money, or you're only living on the accounts receivable that you have. So this creates a huge problem for persons. They may have gone out and bought life insurance or death insurance, maybe not, but disability income impacts their lives, and it's what we call a living death, financial death.
Yeah, that's a good way of putting it. It's good. And there's so many questions that come to my mind as I'm hearing you talk. The first is you mentioned car accident, you mentioned illness. I think most people, when they think of disability income insurance, they think of getting into an accident. But isn't it true that I think like 90% of disability claims are as a result of illness, like
Probably more
cancer?
like 2/3, like 75% are illness. It's usually illness as you age. So
Right.
imagine the dentist who suffers a bad back or a hip. They may have the type of disability that isn't one where it's sudden and they're life flighted in and then learn how to walk again. They may suffer slow, debilitating loss of income. This is about loss of income over a period of time. And sometimes it's very subtle. It might be the type of disability where the bad back causes them to be restricted in their work, and then it becomes total disability.
Right. I like to say offense wins games, defense wins championships. So many people when they think about financial planning, they just want to put their money in quote unquote the market, whatever that is, and get some return, which is all ephemeral, may materialize, may not, right? And they don't put any thought into, well, wait a minute, how about playing a little bit of defense? Because the reality is, I'm sure you have some statistics, I do too, that most people who go through bankruptcy, who suffer some serious financial setback, it's usually health related. It's usually, I had a cancer diagnosis and I was out of commission for 2 years and I was getting treatment, right? Something like that happens that they didn't plan for. It's not that they made a bad investment, right? It's that something happened to their health, right?
Absolutely. I'll give you an example of a floor installer who bought permanent life insurance and disability insurance. and just a floor installer making pretty good money in North Canton, Ohio. And he got terrible cancer. And this cancer was going to kill him. They had to do really radical procedures to save his life. He's still alive, but he wasn't able to work. And so he was able to transfer his needs for income to his disability insurance policy that he had. And they sent him a tax-free check every month so that he was able to stay in his home and maintain his lifestyle while he got through this terrible cancer treatment. And then he was able to come back to his practice and his business.
Right. And I like to look at financial planning through a much broader lens because, like your homeowner's insurance, that's part of your financial plan, your car insurance, right? Your health insurance, that's all part of your financial plan. It's not like just your 401k, like that's your financial plan. No. Okay. So why is it then that people they have homeowners insurance, they have car insurance, they couldn't imagine not having those, and yet they skimp or they don't have life insurance or disability insurance? Why do people think this way?
Because it's not required. If you buy a car, there's requirement that you're going to have auto insurance, or even in society that you're going to have homeowners insurance, and you're going to have health insurance usually provided by your employer. And in the case of death or disability, it's up to us to voluntarily buy those products. And people don't want to buy insurance. They don't want to pay for insurance, especially if they don't think they need it. But they do need it. They need some type of plan there. And that's why I specialize in these products, because it's so many people need this if something were to happen.
So what would you say? Because I know we've had this conversation before, to someone who has a group disability plan.
Yeah. So this is oh, I'm sorry.
Yeah. Yeah. Why would they want, they say, Ben, I'm covered. I've got my company covers me. I'm done. Like, well, why would I go spend money when the company's giving me something? Go ahead.
It's a great benefit that the company provides. And in the case of hospitalization or health insurance, it's protected by the usual and customary schedule inside the hospitalization plan. And for the most part, most claims are paid. We might gripe about it, but hospitalization seems to work. In the case of disability insurance, if somebody were to suffer a disabling event, the insurance carrier doesn't want a high replacement ratio of income to their current salary, or they won't have an incentive to come back to work. In the case of health insurance, they send the claim money to the doctor, to the hospital. Here, it's coming to you. So if you were to receive more money disabled than you received healthy, then certainly you wouldn't want to come off claim. So the group insurance carriers make sure that the replacement ratio is extremely low, especially for anyone earning over $75,000 to $100,000 a year. So the replacement ratio, what you might need every month after tax to pay your bills, it will be inadequate. And if I made the comparison to health insurance, if you had a health insurance claim and the health insurance at your employer only provided 20 or 30 or 50 cents on the dollar, you'd look to supplement it. And that's what most executives need to do with group disability insurance. They should be supplementing it with individual coverage that's portable, goes with them wherever they go, and plugs that loss of income gap.
Yeah, it's portable. That's one thing I like to point out, is that having a group insurance plan of any kind does not protect your insurability, right? Let's say you have an awesome group disability policy, which I suppose is theoretically possible. Okay. It still doesn't protect your insurability. What happens when you leave that employer, right? Or when that employer stops offering it, because they're under no obligation to keep it in force, right? And what if something has happened to your health where now you go and try and get it on your own and you can't, right?
That's right. And we're just looking to supplement that group plan. And then once, let's to talk that out, if an executive owns that and they're only buying that little bit of gap coverage, if they leave and become self-employed or go to another employer where there's no group disability insurance, they're able to expand their individual policy without medical evidence. They're able to expand it to protect themselves. And that's a fabulous feature that's built into individual, cannot be canceled. The rates cannot go up disability insurance. And that's what we promote.
Yeah, it's such a huge huge benefit that you can add coverage later without providing evidence of insurability. So no matter what happens to your health, not only can you keep the policy in force, you can increase your coverage no matter what's happened to your health. It's so phenomenal.
The biggest purchasers of our individual disability insurance are self-employed executives, but especially physicians. So over my lifetime, my 30 plus years, it's a physician and nurse market. And the reason they buy is they understand that without their income, everything stops. No more 401k deposits, no more house payments, no more loan payments, loan repayments for their medical school. And so they all automatically purchase individual, cannot be canceled, portable disability insurance. And the rest of the population out there needs to be educated and encouraged to purchase that. And that's why I specialize in it, helping financial advisors, CPAs, property casualty agents to promote individual persons and families owning income replacement insurance.
So what would be sort of like the general principles people should be looking at for just your average person? Maybe they're a W-2 employee, middle income. What are some of the principles they should be looking at, or how should they approach getting a disability policy?
Yeah, so let's use an example. So let's say somebody's an easy person would be a self-employed dentist. So we think about the self-employed dentist. They go to work every day. If they don't go to work, they don't earn any money. And so if they get in a car accident, there's going to be some gap in the future. And so what we want as quickly as possible, they have accounts receivable and we have a deductible to keep the prices down, the monthly premium. But what someone will want to think about is owning some coverage that if they are disabled, and if they're disabled 90 days, that's a long time, 3 consecutive months or on and off. The average duration of that claim might be 2, 3, 5 years, average duration on the bell curve. So could our financial planning clients or CPA clients, could they handle a 2, 3, 4, 5 year loss of income? Are they going to move out of their house or have to sell their 401k? And so that's the typical risk, average risk that we want to try to plan for and make sure that we have insurance in place to cover that, whether it's a forever disability or a shorter term.
Yeah, and I think it's always best to never start the conversation with, well, what do you need? Right? Because strictly speaking, you don't need any coverage, right? You don't need this, right? You need food, clothing, and shelter. You don't need any of this. The question is, put aside price, put aside all that for the moment. Let's not limit our imagination. What do you want, right? What would you want? And obviously, everybody would want the best, most robust possible coverage out there, right? So we start with that. And then from that, we work backwards to doing a cost benefit analysis to what makes sense for you, right? What makes sense for you. But when people approach it with this scarcity mindset, what do I need? I don't need that. Well, yeah, duh, you don't need that, right? The question is, what would you want, right?
Absolutely. And what we want to do is make sure the persons have full coverage if it makes sense and they can afford it and it fits into their balance sheet. But certainly if I suggested to somebody, we're at the bar and we're just talking about it, and I suggested, gosh, if you would just give me 1% of your income, you make $100,000 a year, would you give me $2,000 a year, 2% of your income, you can keep 98 cents of every check, and I'll put together a short and fat or a long and skinny great disability plan for you. It seems like that someone should consider 2 or 3% of their income that certainly could go towards having the best income replacement so they don't lose their home or lose the deposits going in the 401k if it's just an interruption. But we don't want persons to go broke, and they will go broke if they don't have income. We ask the question, what's the source of income that would come in after 90 days? And if someone can answer that, they have rental income or dividend income, then maybe those are the persons that need less disability insurance or maybe none at all. But everybody else needs it at some point.
Yeah. And of course, they're missing the point that it's not a needs-based discussion. It's setting up proper financial structure. That's what it's about. If you're disabled, you're going to want the maximum benefit, right? Even if you don't, strictly speaking, need it, right? You're going to want that, right? So why not? If the cost benefit analysis makes sense, why not have it, right?
That's right.
So I think an ounce of prevention is worth a pound of cure, of course.
And
right?
this is where your macro strategies help tighten up the purse string so we can find the money to implement additional coverage that's so important like this.
Yeah, yeah. And you mentioned 1 or 2% of your income. It's funny because a lot of people are contributing more than that to a 401k without even thinking about it. No thought process, no strategy, nothing. That money is just gone. And they don't even think about it, right? And their money's just locked up in a Wall Street jail and they can't touch it for decades. So
Right.
if you're going to do that without even thinking about it, wouldn't it make sense to redirect 1% of your income to something that's going to protect you, right? That's
Absolutely.
going to borrow a phrase, that's going to, so your financial plan, failure is not an option, right? If you
That's right.
don't have a disability policy, failure is an option, right? If your income stops, I think all of us pretty much would have a problem, right? For sure. So,
I agree.
and you mentioned medical professionals being the best market for this, and that makes a lot of sense because they see what it does, right? And it's not a hypothetical to them because they've probably seen through patients or through stories what has happened. I'm going to throw you a bit of a curveball because one thing I'm seeing too is that a lot of these medical professionals, they have robust disability coverage, which is great. What about a critical illness policy? Do they
Yeah.
even know about that? I think they would be probably amenable to something like that if they knew it existed.
Yeah. The certain medical practitioners want the max disability insurance we can put in place. And sometimes we add Lloyd's of London coverage if they're really, really high wage earners. But critical illness is absolutely a great product that is easy to purchase and is in addition to disability insurance. So when someone's maxed out on disability insurance, including Lloyd's of London, which are Lloyd's of London general agent, then they can add in critical illness or other types of coverage that will pay if they suffer one of those illnesses. And those are the
Right.
big ones. And those are the big ones that get the cancer, the stroke.
Yep. Yep. And you could still be working, right? You could get cancer
That's
and
right.
not go on disability because you could get cancer. Maybe they catch it early enough. Maybe you're out of commission for like 2 months, but you're not out of commission for a year, right? In that cancer policy would give you a nice lump sum benefit, right?
Sure, sure, absolutely.
And as a whole life guy, there are even whole life policies that have critical illness riders as well.
Absolutely.
You can get a
These are
benefit.
great. And the marketplace is evolving in such a great way to provide these options for the customer. They just need a Sherpa, somebody to help put it together, patch it together so it makes sense for them and they can justify affording it. Nobody wants to buy insurance, but they want the insurance benefits if something were to happen and they want to sound.
Exactly right. And there's no such thing as being overinsured. The insurance carriers won't let you, right? If they base the amount of insurability you have on your income, right? So they are not going to protect income that you don't make. So it's impossible to be overinsured. There is no such thing, right?
And with death and disability, these are not insurances like other insurance. You can't have a claim and then rethink it, sadly, to put the coverage in place. Too late. So we have to do that planning prior. We have to recognize those gaps and fix it. And disability insurance is the largest gap in most person's financial plan. There's none, or if there's only group coverage. Everybody has Social Security, so we have that if you're in for 10 years, so 40 quarters. But that's your retirement plan being switched on, and it's total continuous permanent disability, very stringent. And if you have group coverage at work, often that group coverage will reduce by the benefit from Social Security. Again, these are surprises that we want to work through in advance.
Yep. So many people, they sign up for their group disability policy and they don't even know what it is. They don't even know what's covered, what's not covered. So I want to give a shout out to Ben because one of the things that he's done for my clients is they will send me their group disability policy, right? I take a big picture approach and incorporate everything, but I don't pretend to be an expert in everything. So I'm not an expert in disability. And so Ben basically reviews the contract so that the client understands what they have. And once they do understand what they have and the limitations, then they see quite clearly why it makes sense to supplement it with an individual policy or even replace it with an individual policy, right?
Absolutely.
So that's the importance of partnering among financial professionals, right?
And
And coordinating.
there's something else I'd mention also, that, we talk a lot about total disability being life flighted in, but it's more that slow erosion later in life. A, a wage earner gets into their 40s or 50s and they're a chiropractor, they're whatever work they do, even a corporate executive, and they suffer an illness and it's debilitating, and it might not be sudden all at once, and maybe they're getting chemotherapy from cancer, and they're trying to work and not work. And so this issue of partial benefits for partial loss is really a large area that is like another large checkbox that needs to be explored by all persons that make money and are trying to pay their bills with that money. Could you pay your bills if you only earned half your income? What would your employer do if you could only show up for 30 or 40% of the days? Would they let you go? What
Yeah.
happened?
Yeah. Believe that's called residual disability.
It is partial
Yep.
benefits for partial loss. And it's so important to address. And if you're a corporate executive, to address. I had an executive who bought disability insurance for me and got leukemia. And he was actually a cancer researcher, amazing. And he drove 45 miles one way every day, 80, 90 miles a day round trip, so his kids could be in the school system he wanted to be in. He was a little bit older, and he got this terrible cancer, and he had no group disability benefits at work. And so his individual insurance paid the mortgage for months. And he was still able to work from home a little bit. It wasn't substantial. And the policy worked for him. And so this is where the value in owning individual disability insurance will come and save somebody's family and life and income.
Yep. And I know you mentioned a few different ways to break it down. We don't have to go into too much details, but I know you mentioned there are different sort of use cases for disability: loss of income, key person, loss of business. You want to go through those briefly? I think
Yeah, we as advisors deal with business owners a lot, and those business owners have key people. So what do you do if your key person or your rainmaker gets cancer? Do you let them go? What do you do? So we want to have provisions in place so they can go off and fight the cancer, and their income is replaced by the disability insurance, not by your payroll. You're the owner, and you have freed payroll up to hire a new key person. Maybe you bring them back, maybe you don't, but at least you can deal with that, or on a partial benefit, partial loss, partial benefit. If they're working part-time, they can earn part of their income, and that still frees up payroll. This is good for everybody. And so we do a lot of disability buy sell. These all go along with like life insurance. What if somebody dies or becomes totally disabled? Where does the money come to from the corporation to pay off the disabled partner? They're not dead, so there's no death payment being made yet. So oftentimes we put in corporate situations, business scenarios, buy sell, key person and buy sell disability insurance. Certainly all these business owners need to have wording. They need to have documents. They need to have a plan. And then we come in and fund that plan with buy sell life and disability insurance, buy sell and key person life and disability insurance. There's also 401k completion. So that's a separate contract. So we write a lot of disability insurance that just completes the 401k for an executive. That's in addition to their monthly income that pays the bills at home. Otherwise, they won't have a retirement. We also write critical illness, like we talked about, and other types of products that patch in Lloyd's of London in addition to disability insurance.
Excellent. Yeah, and I know we'll probably talk about this separately, but I know also long-term care insurance is something that you do for sure. That's a big one. That is one that I think people are more starting to wake up to, believe it or not. I find the long-term care discussion to be actually an easier one than disability. People are more aware of that, I think.
Here's how the disability insurance reacted to that. So let's say our dentist becomes totally disabled and they're making $100,000 a year. So their disability insurance, personal disability insurance, is going to be like 60, 65%. It's tax-free. So they're going to have 6,000 or 7,000 a month of disability insurance, somewhere in that range. But what if they're bedridden, unable to do 2 or more activities of daily living, the long-term care trigger, really disabled, like a stroke, unable to breathe, bathe, dress, transfer, eat, those kind of things. So if that were to happen, The disability insurance carriers layer in, if you want to purchase it as a rider, additional coverage. In this case, that would take them all the way to the $100,000, would replace that. So they're actually earning a little bit more than they did net after tax, but they're disabled. And that would come in tax-free also, but it's with a more stringent trigger. Disability insurance that we promote has the most liberal triggers, sensitive trigger to when somebody's unable to do their duties, like the dentist. What if the dentist has blurred vision? They could still work, but they cannot be a dentist. We pay them anyways. Or the surgeon that hurts their shoulder, they get paid anyways. It's called own occupation protection. Or the trial attorney, or the whoever that might be, they recognize that specialty. And so these are important contract features that we protect the customers with. So if they have a claim, the insurance company doesn't show up and say, oh, well, there's a job you could do. We're going to expect
Right.
you to do that job. That's how group insurance works.
Right. And I'll include in the description below in my John Smith case study. I have a case study where I walk through a full case, and there's one whole episode dedicated to going through the disability policy, going through in detail all the different riders, and everything in there is pretty much what I learned from Ben Feigenbaum with that particular policy. And I'm sure there's additional things you could talk about. But yeah, a lot of why these riders are so important as part of your overall solution. And you mentioned long-term care. Critical illness policies also, they're doing the same thing where they have riders in there where it's the same thing. If you're unable to perform 2 out of the 6 activities of daily living, there's a benefit associated with that as
Add
well.
more, right? Add more because you're so disabled. Absolutely. They want to take the person that's unable to breathe, bathe, dress, and try to provide more money then. More money. And that's a good thing for these persons. They need all the money they can get. They need to hire a nurse at night, during the day, weekends. They need this kind of respite care. So it's tough, let alone modifying the home. Kids still need to go to college. Does the 401k get contributed to? How do you stay in the home? I'll give you an example. I have a fellow I met, he was already disabled, and he used to do speaking with me. And he had a group disability policy. He was in Akron, Ohio. I won't mention the company. And he was the head of sales. He had moved to Akron to run the whole sales. It was a large company, a few thousand employees, and nationally known. And he had a head injury, neck injury. Never able to work again. And he had this little house, nice home, and a mortgage. And he had group disability insurance. And the group disability insurance paid him. It reduced by the Social Security award, but he got Social Security in addition to a small group disability benefit. But as I got to know him over the years, he had an empty lot next door, and so proud that he was able to keep that empty lot. They had enough money. But after time, no more money went in the 401k. He had to sell the empty lot. Eventually he had to sell his house. It just wasn't enough money. He needed more money. And so we want to make sure enough money shows up for that person that stays alive and feels miserable if they're not able to generate income.
Yeah. So what are some of the what are the thoughts you'd like to leave our viewers with in closing, Ben, with regard to disability and what you do?
We live in a live, die, sick, or hurt world. We all want to focus on live, having more stuff, paying the least amount of taxes legally and possible. We accept that we're going to die someday, and we buy rented insurance or permanent insurance to address that based on our financial advisor and our thoughts about that and how we want to handle our legacy. But sick or hurt is a real gray area. What does your health insurance pay or not pay? What are the usual and customary schedules? What happens if you're involved in a car accident, the person doesn't have, auto insurance? But the biggest area is loss of income. Where's the money come from? If you're self-employed or work for a company, unless you can point to somebody who's going to pay your bills for you 30, 60, 90 days from now, this is a huge gap that needs to be addressed by every individual, family, wage earner, and they need to answer those questions and work through the dynamics of what they need for their income to stay and remain steady throughout their working career and after.
Yep. It's a big gap, which is not too difficult to fill. Just a little bit of planning and foresight. You can put yourself in a much better situation. And Yeah, go ahead,
I'll even
Ben.
say this, we would like to put in place a policy for you while you're young and healthy that cannot be canceled. The rates cannot go up all the way through the length of the contract. You own it. It follows you to whatever occupation you go to. No reductions by Social Security workers' compensation. It's specific to your own occupation. It'll pay partial benefits for partial loss if your income, you just suffer a loss of income for a period of time. Has recovery benefits built in. We can add in that catastrophic benefit, which gives you 100% coverage, like long-term, adding long-term care. So you get 100%. We can add a cost of living adjustment so that if you're long-term disabled, your pay will keep pace with inflation, something we now are living with again and know about. So if you were on a claim right now, long term, you're going to stay on that claim long term, and we have inflation, that means that sometime in the future, the dollars you're getting are worth a lot less. So we need to address those issues, let alone if someone even has coverage.
Yep, the sooner you do it, the cheaper it's going to be. And I have a customer, a client that Ben helped out with. He had a group policy. Ben reviewed it and sort of redlined what were the limitations of it. After looking at it, the client said, "Yeah, I don't want that policy. I want an individual policy." He took out that policy at age 29 or 30, I believe. He's locked in for the rest of his working years, all the way to age 67. His rates will not go up, and no matter what happens to his health, he can add more. Right? That's
Right.
phenomenal. That's phenomenal.
Based only on financial need. That's correct.
Yeah, it's phenomenal. The sooner you do it, the cheaper it will be, the more cost effective it will be, and the more risk you remove, right? Because you're protecting your insurability too. Now, no matter what happens to your health, you keep that coverage in force, and you can add more as long as you're in your working years. And I also have to add parenthetically too. I think you can actually keep it in force for this policy to age 75 on a limited basis.
As long as you're actively working, the rates will change after age 67, and they decide if they want to keep it or not. I have thousands of policyholders being a second generation planner or disability specialist. So I have lots of policyholders that are reaching that age 60. Back then it was 65. And like half renew, half don't. They're still working. Some do, some don't. But at least
yeah,
they're
yeah. Most people keep working into their 70s, even if they don't have to. Be nice to know you still have protection for them. Just again, think about how likely it might be that you would have some form of illness or disability when you're in your 70s, right?
Yeah, I want to say something though. There's something we really didn't talk about. So let's say someone's young, we're talking to them and bringing up this issue of disability, and your fellow was 29 years old. Let's say he makes $100,000 a year. He's 30 years old. Age 67, that's 100,000 every 10 years, right? $1 million. So we got $3.7 million without a pay raise. What other asset does that 29-year-old have that represents $3 to $4 million without a pay raise? No other asset. His greatest asset is his ability to go to work every day and earn these millions. He's not the $6 million man, but close. And so we need to protect that asset. And that is not recognized by most people. We recognize it in the death or life insurance business because we recognize what income is over a lifetime and make sure that mama and the kids, or the reverse of that, have some replacement of that if there's a car accident. So same thing for disability.
Absolutely. Of course, you probably know the classic pitch or conversation around disabilities. You ask someone, what's your most valuable asset? Right? And if you ask people that question, most of them will think about it, and they'll probably say my house, something like that. They'll think about the thing that if I sell it would give me the most money. So if I got a paid off $500,000 house, I could sell it and have 500,000. Well, you still need a place to live, right? So you'll then have to rent, and your most valuable asset when you think about it is your ability to generate income. If you have the ability to generate a healthy income at any point in time, you'll probably be fine. You can probably weather a lot of storms if that income keeps coming in, right? But no matter how much money you're making, if that income stops, then what happens, right?
You asked a great question in the beginning. Why do I specialize in this product? Because I want to help people to not suffer loss of their home, the indignity of suffering a disability and then not being able to provide for their family, like this fellow in Ohio. I saw how it hurt him. He only had this much money coming in, and eventually it really ate away at him, in addition to the disease and the mental problems.
Yeah, I'm sure you've got a lot of stories. Um, I want to mention too, one of the things that these disability policies will also cover as a disability is substance abuse or mental disorders, right?
They
Things
do.
like that
Some
can
limit them to 2 years, some are unlimited, but yes. And those are really serious issues that someone might suffer, and it might be temporary.
yeah,
Sometimes it's permanent, and yes, they address those. We have lots of most of the claims are lower back claims. A lot of lower back and back claims and mental nervous stress disorder, but there's lots of strokes, heart attacks, car accidents. I see it
yeah,
all. The claims are all over the map.
yeah, yeah. Why not protect yourself? When you think about what it costs, quote unquote, relative to what you're protecting, right? So you mentioned, think about how much income you earn from now until the day you retire, whatever that lifespan is. If you make $100,000 a year, you're 30 years old, you're probably going to work for at least another 30 years. That's $3 million of income you're protecting. So when you look at the premium you're paying relative to that, it's pretty small, right?
Absolutely. The hardest part is getting through underwriting when you're young and healthy. Lots of persons will wait till later when they have more income to protect. And now they might have pre-existing conditions or a lower back problem, which they'll exclude. And we still get through that, but young and healthy is a good time to buy.
Absolutely, absolutely. Before the rain, before the fire, right? Before it happens.
Yeah.
Awesome. Okay, Ben. Well, thanks so much for your time. We really appreciate your insights, and I'm sure we'll do this again. But
Thanks for
thank
the
you so much.
opportunity. Thank you for the opportunity to explain about disability income and how it benefits people to own it. Thank you.
Absolutely. Thank you, Ben.